Hey guys, today I'll be making a video about market structure and the reason why it's important when you're trading. Now, one thing I will say about market structure right off the bat, guys, is the higher the time frame, the more effective the trend or the range is going to be. Now, I'm going to get into that right now in a second. I'm going to explain what ranges and trends are. But just know that the higher the time frame, the more effective these patterns are. Now, there's three ways that the market is going to move, guys. So the first way is going to be an uptrend. The second way is a downtrend. The third is going to be a range. So let me show you how an uptrend is going to look like. Now, technically, guys, an uptrend is going to be going up, then it's going to come down, then it's going to go back up, break that high, then it's going to come back down. That's going to be the pullback. It's going to go back up, and then it's going to keep going back down, get in the pullback, and then it keeps going back up. Now, when you see this form while you're trading, guys, you can trade a trend in any time frame. I just don't recommend the 1 minute, but up to the 5 minute. And you can get involved in the market through the pullbacks. Now, the pullbacks are going to be these levels here when the market goes down in a downtrend. And the reason why these levels are the most effective is because that's when the market is moving in waves. Obviously, when you're trading Forex, markets don't clearly go up in one direction so powerfully in a straight line. So you get in the pullbacks. That's the best way for you and the safest, truth be told, for you to get involved in a trending market. Now, let me say this. And this is very, 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 very important, I must say. You do not have to be the first buyer when the market is trending. Now, what do I mean by that? That means that you're trying to catch the bottom or the top if it's a downtrend, and you're waiting for that move to come in and occur. Chances are, guys, that when the market is consolidating, it's going to start a new range, and you have to literally be sitting on the screen all day for you to catch that bottom and then start riding the trend all the way to the top. You don't have to be the first buyer or the seller, guys. The best thing I'd recommend is for you guys to get involved in the first or the second pullback. Those are the best ways to get involved in a trending market. Once you start getting involved in the third or the fourth or the fifth pullback, that's when you start running into chances. If you're trading the trend in the 1 hour, the 4 hour, the daily, you start running into situations where the market may start to consolidate and start forming some bearish patterns. So the best way to get involved in an uptrend is through the first or the second pullback. Now let me show you guys real quick how an uptrend looks like and how it first started. All trends always will begin with a bullish or a bearish pattern being formed. So remember, guys, the higher the time frame, the more powerful the trend is. We're in the weekly chart on the NASDAQ, and yes, I did cherry pick this example. A lot of the examples, when you're back testing, you'll find actually when the market is going to start trending, a bearish or a bullish pattern gets formed first. So we have a double bottom being formed here. So that's the first bottom. The second bottom is right here. And after this got formed, guys, this pattern, that's when you see the market started trending back up. Now, how do you get in? It's quite simple. Same thing. You want to get involved within the first or the second pullback or the third pullback. Now, how long is a trend going to last, guys? Who knows? Who knows? But when you're trading, you always want to make sure that you get involved in the first or the second pullback at max. So if you were to be trading the NASDAQ in the year 2009, this would have been a great opportunity for you to have gotten in. The market went back down, retested this previous resistance, and then the market pushed back up, went back down, second wave, retested this level of resistance, and then it went back up again. So that's an uptrend. Now let's get to a downtrend. So let's go to the daily on the euro dollar market. And first of all, so downtrend, how does it look like? So downtrend is going to look like this. It's going to come from a descending pattern. then it's gonna pull back, then it's gonna come back down, then it's gonna pull back, it's gonna retest that previous resistance, then it's gonna move in a wave, break that low, and then it's gonna retest it again, and then vice versa. It does the same thing. So it's the same idea, guys, as an uptrend. What you always want to look for first is you want to make sure that a bearish pattern gets formed first, which I will be teaching you guys some bearish patterns to look at, keep an eye out for. After the pattern gets formed, guys, obviously the market is going to be retesting that level, and that's going to grant you your first pullback. So first pullback is going to be there. The market's going to break that low and then create a new low. Then it's going to retest the previous low, create another wave, and then the market goes back down again. So this level here and this level here grant the best opportunities for you guys to have gotten in. Again, the advice stays the same. The more the market starts to trend, the more you run into chances it may consolidate, and bearish or bullish patterns may start getting formed that are not in appropriate wave with the trend. So that's a downtrend. We're going to do one more example of how a downtrend looks. Well, I'm going to show you guys an example of how a downtrend looks in the charts. So euro dollar, since July all the way to October, it moved in a downtrend, and you can clearly see it from right here. So it went all the way down up to these levels, and then it consolidated for a bit, and then it went back up. Now if you go to the line chart, it's the most efficient way to see the way the market moves. You're gonna notice market went down, then the market pulled back up, then the market went down, then the market retested the previous low, and then the market went back down again. In this period it consolidated, market went back up again, couldn't quite close in this resistance level, formed a bearish candle, engulfed this, and then it kept going back down. Market again retested this level up here of resistance, and then the market went back down again. So I hope that makes sense for you guys. Market structure is very effective to learn, and I must say it is one of the most effective things you have to know when you're starting to first trade anything, really day trading, is you have to learn market structure. That's a downtrend. So I'm going to show you guys now how a range market's going to look like. So I already plotted the levels. DXY had a ranging market from September of 2023 all the way to November. And here is my take, guys, on how you would want to be involved in ranging markets. Now, this is up to you. The best advice after listening and talking to my mentors, and for me actually trading it live, right? When I'm trading live and I start to determine and figure out that, hey, we may be in a ranging market, it is best for you to want to get involved in the tops and the bottoms of the range, so that grants the best opportunities to trade when the market is ranging. Now, in this example here, the best way to have gotten in would have been this top here, or this bottom, and this bottom. Now, here's my take on ranges, guys. I would say you should stay away from ranging markets because there's so many indecisive factors going on. You don't have a clear idea of direction of where the market wants to move. Usually, guys, when the market is consolidating, by the way, it's because a big news event like inflation data, interest rates is going to be released, or it's going to be coming to release. So my best take on ranging markets is just fundamentally wait for the news event to drop and release. After that, make educated decisions based off the fundamental information that was provided and see which currency gained the most strength. And from then on, once a level gets broken, like right here, so the dollar was in an uptrend, then it started to range, and then this candle here clearly broke support, sorry, and then the market did the same thing. It went up, retested this previous support, sorry, and then it went back down again. And now at this point, if this level was to ever get touched, now it's resistance. So that's how you trade a range, guys. I will be making another video tomorrow explaining chart patterns and how to effectively trade them with structure as well too. For today, I just wanted to show how an uptrend, a downtrend, and a ranging market works. Let me know what you guys think. Comment down below if this video helped, or your ideas, your views. Other than that, guys, thanks for watching and trade safe.